I'm Zaki, your go-to crypto analyst and scriptwriter bringing you the latest and most insightful updates from the world of blockchain. Today, we're diving deep into one of the most talked about events in the crypto space, the PiNetwork's upcoming 1.6 billion token unlock. Stick around as we break down what this means for Pi's value, the potential market impact, and why it could redefine how we see token economics in emerging networks. And before we get started, here's a quick crypto disclaimer. The content in this video is for informational purposes only and should not be taken as financial advice. Always do your own research before making any investment decisions. Let's get right into it. PiNetwork is set to unlock a staggering 1.6 billion tokens over the next 12 months. That works out to roughly 143 million tokens per month. Now, if you're familiar with crypto tokenomics, you might immediately think, whoa, isn't that a massive increase in the circulating supply? And you're not wrong. At present, there are about 1.7 billion tokens already in circulation. This means that if all these tokens were to flood the market immediately, it would represent an annual inflation rate of nearly 95%. But here's the twist. PiNetwork isn't your run-of-the-mill cryptocurrency. They've built in a unique lockup mechanism that could significantly mitigate the inflationary pressure. Unlike other tokens that get released directly into the market, PiNetwork allows pioneers, that's what they call their community members, to relock their tokens once their initial lockup period ends. This means that instead of all tokens becoming tradable, a good number of them could essentially be locked away, reducing the effective increase in supply. Imagine it like this. You have a huge water tank that's about to be filled, but most of the water is being pumped into underground reservoirs instead. The surface-level water, which represents the tokens in circulation, only increases modestly despite the overall addition. This innovative mechanism could transform what appears to be a potentially risky token unlock into an opportunity for stability and even appreciation in value. Now, let's talk about the lockup effect. Many of you might wonder, will the inflation really hit 95%, or could it be lower? The answer lies in how the community, the pioneers, reacts to this unlock. Since many pioneers are expected to relock their tokens after their lockup period expires, the number of tokens actually entering the market might be much lower than the total 1.6 billion scheduled for release. Estimates vary, but some experts suggest that this mechanism could drop the effective inflation rate to as low as 10% or even 1% in certain scenarios. It's all about the level of confidence that pioneers have in PiNetwork's long-term vision. If the majority choose to lock up their tokens, the circulating supply stays relatively controlled, which in turn prevents an oversupply scenario that typically drives prices down. This phenomenon is especially interesting because it's a community-driven counterbalance to what would normally be a straightforward inflationary pressure. In traditional markets, a huge influx of tokens might lead to a quick price drop due to oversupply. However, with the relocking mechanism, PiNetwork essentially gives its community the power to decide on the token scarcity. It's like a self-regulating ecosystem where each participant's confidence contributes directly to the asset's value. This could be a game changer, providing a blueprint for other emerging projects to follow if it works as expected. Moving on to how the market might react to this unlock event. In most crypto projects, such significant token unlocks are usually met with a mix of excitement and caution. With PiNetwork, however, we're seeing a more nuanced picture thanks to its unique economic design. First off, the current tradable supply is at 10.8 billion tokens, and the unlock adds 1.6 billion tokens into the equation. At first glance, that sounds like a lot, but remember that many tokens are expected to be relocked. This means that rather than a sudden flood, we might see a steady, managed increase in the circulating supply. The community's behavior here is critical. If pioneers maintain trust in the network and decide to lock their tokens, the market could actually see reduced volatility. In some cases, we might even see deflationary effects if demand outstrips the available supply. Its utility is expected to grow as the network integrates with other blockchain platforms and expands into real-world applications. This increased usability could drive demand, giving holders more reasons to keep their tokens rather than sell them off. Essentially, as the network matures, we might witness a shift in mindset among pioneers, from short-term traders to long-term believers in the platform's future. Market trends in the crypto space have shown that community sentiment can make or break a token's success. Historical examples remind us that when a strong community backs a project, even seemingly negative events like large token unlocks can be neutralized. The key factor here is trust. If the pioneers show unwavering confidence by locking in their tokens, the token's scarcity and, by extension, its value, may well be preserved or even enhanced over time. Let's take a moment to address the elephant in the room, the ultimate test for pioneers. The next 12 months aren't just a timeline for the token unlock. They're a crucial period that will define PiNetwork's economic future. It's a make-or-break moment where the community's collective actions will directly influence whether PiNetwork emerges as a valuable, scarce asset or falls prey to market saturation and volatility. Picture this scenario. Imagine you're at a crossroads where your decision to either hold and lock your tokens or sell them could affect the entire network's value. That's exactly the situation facing Pi's pioneers right now. If most of you choose the long game and trust in PiNetwork's vision by relocking your tokens, you're essentially voting for a future where scarcity is maintained. This, in turn, could propel the token's value upward as demand increases with real-world utility and broader adoption. On the flip side, if too many pioneers decide to cash out immediately, the market could experience a significant influx of tokens, leading to price volatility and a potential drop in value. It's a delicate balance, and the stakes couldn't be higher. This isn't just about numbers on a chart. It's about the trust and commitment of a community that believes in the potential of blockchain technology to revolutionize digital transactions and everyday life. The beauty of this mechanism is that it hands a considerable amount of power to the community. Unlike many top-down decisions seen in other projects, here the pioneers have a direct impact on the token's scarcity and, by extension, its market performance. This dynamic underscores the importance of long-term vision and active community participation. It also poses an intriguing question. In the rapidly evolving world of crypto, can a community's faith in a project overcome the traditional challenges posed by inflation and market saturation? As we zoom out and look at the broader implications, there's a lot to unpack. The PiNetwork token unlock isn't happening in a vacuum. It's part of a larger trend where innovative tokenomics models are being tested and refined. Many projects have struggled with token inflation, but PiNetwork's community-driven lockup mechanism offers a novel approach that could inspire similar models across the crypto industry. Moreover, the success of this model may well influence investor behavior in other projects. Imagine a scenario where, instead of fearing massive token unlocks, investors start to see them as opportunities to reinforce their commitment to a project. This shift in mindset could help stabilize markets that are often marred by panic selling and short-term speculation. Looking ahead, if PiNetwork can successfully navigate these challenges and capitalize on its unique economic design, it could set a precedent for future blockchain projects. The way pioneers handle this token unlock will not only shape Pi's future, but might also offer valuable lessons for the entire crypto ecosystem. So what's the bottom line here? The PiNetwork's 1.6 billion token unlock is much more than a routine update on token supply. It's a litmus test for the strength and conviction of its community. Will the majority of pioneers choose to lock in their tokens and bolster the network's scarcity? Or will a flood of unlocked tokens drive significant price volatility? Only time will tell. For those of you invested in or curious about PiNetwork, this is a pivotal moment. It's a chance to see firsthand how innovative tokenomics can potentially overcome traditional inflationary challenges and pave the way for a more sustainable and valuable digital asset. As always, I want to remind you that this video is for informational purposes only. I'm not offering any financial advice. Make sure to do your own research before making any decisions related to your investments. If you enjoyed this deep dive and found value in our analysis, please hit that like button, subscribe for more updates, and drop your thoughts in the comments below. How do you think the PiNetwork unlock will impact the market? Will pioneers show their long-term commitment, or are we in for some serious volatility? Let me know what you think. Thanks for watching this episode of Zaki Crypto Update. I'm Zaki, and I'll be back with more insights, market analysis, and the latest news from the crypto world. Until then, stay curious, stay informed, and as always, keep riding the blockchain wave.